It seems like takeover news has been everywhere across markets over the past few months. Everyone's familiar with the dance between Elon Musk and Twitter, but Mike Cannon-Brookes has of course had his own dance with AGL Energy. Through Grok Ventures, he's taken the largest shareholder stake with over 10%. However, today there was another turn in the tale, with AGL officially announcing that their demerger that was planned has been cancelled. There's a lot of eyes about what this could mean for the AGL company, but also the implications for the broader energy space moving forward. And of course, this is all layered on top of what was a significant federal election that had a lot of implications and insights about the future of the clean energy transition. Hope you enjoy the video. Park up, sit back and enjoy.
Welcome to the channel and enjoy.
Alrighty, so kickstarting us off, as we can see here, on the 30th of May, the AGL Energy board announced that they officially withdrew their demerger proposal. The demerger was going to be voted on the 15th of June. They needed 75% approval from present shareholders to get that approval. But of course, as mentioned, Mike Cannon-Brookes, through his Grok Ventures investment arm, has taken over an 11% stake. And so as a result of that, they have deemed that having regard to anticipated voter turnout and stated opposition from a small number of investors, including Grok Ventures, they do not believe they will receive sufficient support to meet this approval threshold. Even though their board continues to believe the demerger proposal offers the best way forward, and this was the view of the Independence X board, they believe this path is no longer available. Consequently, as a result of that, following the withdrawal of the demerger proposal, the board will be undergoing a strategic direction review now to try and ascertain where to from here. There's a range of different interesting tidbits and takeaways that we'll talk about later on in this video, not only from the perspective of Mike Cannon-Brookes, but also about where AGL Energy were anticipating heading. Something that was worth noting as well out of all of this was not only was the demerger proposal scrapped, but there's been significant transitions at the leadership level as well. Chairman will resign from the board upon appointment of a replacement, and the CEO will step down as Managing Director and CEO, Graham Hunt. Jacqueline Hay actually resigned immediately, effective on the 30th of May, and Diane Smith-Gander will resign from the board post the financial year 2022 full year results. As noted as well, the demerger was proposed to cost $260 million, and there was $160 million that has already been spent up to this stage, and so that money has been lost now that the demerger has been scrapped. It is worth noting, you might be wondering, why is this so important? Why has AGL attracted so much news time and so much discussion? Not only is it because it's a significant company, obviously with a large market cap, but it's also the significance that it plays in terms of the national energy mix. AGL Energy is Australia's largest Scope 1 emitter, as we can see here, and by some margin. But on the other side of the coin as well, AGL Energy, with over 180 years of experience, it's worth noting that AGL Energy actually lit the first gas lamp in Sydney, all the way back to 1841. So it's got a proud and storied history, but it's also the largest ASX-listed investor in renewable energy. And so as a result of that, obviously the scope of bringing down the emissions and being able to make a difference on that front is large at a national context. But on the other side as well, they have the ability to be a key driver and key leader on the renewable and decarbonisation transition. And that's why it's attracted a lot of attention. And so just getting that understanding about the demerger itself before we talk about what the future could have in store. In terms of the demerger, it was going to be split into two different business units. AGL Australia was going to be retaining the brand there, and that was going to be the retail unit, which would also contain the renewable energy assets. And then Accel Energy was going to be on the other side, which will have the largest electricity generator, still as a tagline. It was going to be the largest generator. It would have all of the old fossil fuel generation, and of course the coal-powered plants, which is so significant within the AGL portfolio, and eventually they would be transitioning towards low emissions energy hubs. It is worth noting that as part of this plan, 2045 was the proposed date for the closure of the final coal-powered plant, but for Mike Cannon-Brookes and others, they were anticipating or hoping that it would be brought forward earlier. Mike Cannon-Brookes was actually hoping 2035 to get to a Paris-aligned target. In terms of the background and the rationale, four key components here in terms of AGL's integrated Gentailer structure. Energy transition. We know the mix of the national energy market is changing and changing rapidly. Energy regulation has meant that it's impacted on the current business model and reduced benefits of the vertically integrated Gentailer model that currently exists. Customer needs and customer preferences are changing, and the clean energy investment and the opportunity to invest into that. Ultimately, the primary takeaway here is that the current company structure limits the ability of AGL Energy to effectively address these evolving market dynamics. It makes it more difficult to execute on the strategic plans of its key business units, while both parts are competing for the same available resources and capital for investment. So there was a split focus. It's obviously difficult to do both of them well, particularly when they've got relatively contrasting objectives that are likely to diverge further over time with this decarbonisation and green energy trend picking up pace. And so with the demerger proposal that was officially scrapped through that AGL announcement, Mike Cannon-Brookes posted this on his Twitter. He said, "Wow, a huge day for Australia with the green and gold there. Had to sit down and take it in. This live shot couldn't be a better metaphor for a better, greener path ahead. It's getting some steps in the nice outdoors there. It looks like a nice walk, actually. He embraces the opportunities of decarbonisation with Aussie courage, tenacity and creativity. Lots of work, but we can do this." And so, of course, along with just saying the demerger wasn't the best way to unlock shareholder value and help Australia transition towards this green energy future, Grok Ventures had the Keep It Together Australia initiative, and that was to keep AGL Energy together. There's a range of different discussion points throughout this document and this memo that you can read separately, but really the key focus here that I think is worth us spending some time discussing is what they believe this means for shareholder value. So in terms of potential factors impacting share price, firstly, there were demerger inefficiencies that they've identified. They ran some numbers that you can read up above if you want some insights into that. The one-off demerger cost, as mentioned, was up to $260 million, a fully complete. $160 million has already been spent thus far. Increasing value as AGL builds products to solve customers' electrification challenges. So they're considering potentially finance products to assist with up to $100K of CapEx for individual customers to electrify their homes, or energy management. And this is an interesting one surrounding the optimization of the behind-the-meter assets. Increased value from the 100% green retailer with leading market share. So obviously as part of this initiative, they were hoping to transition more quickly, the removal of the coal energy power plants, and transition more quickly to a 100% pure play green retailer, and obviously the significant scale of market share. They believe that AGL should be able to deliver the lowest cost energy and best digital product experience to customers, bundling energy products. And ultimately, as a result of that, they have aspirations that by delivering this, AGL could capture 30% market share over the long term, which is significant, nearly a third of the total market share. Increased value from the green premium. We know there's a focus on ESG-focused initiatives. A range of different companies have actually been demerging out components of their offering that may not be considered ESG-aligned. So they believe that there is an opportunity there for a re-rate and increased value from the development opportunity. So those were the different components, and just in terms of the transition towards that. And so then the discussion is, what is the journey to this end state? As I've stated, the energy transition will take time. They believe that AGL can shut down Bayswater as well as Loy Yang A by 2035 to align with the goals of the Paris Climate Accord. So these are coal plants. And they believe that with further investment, they have the ability to then move towards a more renewable focused offering. So replaced by firmed renewables, and they'll offer AGL's retailing business with a natural hedge to the increasingly volatile wholesale prices. So they want to embrace the future that the Jen Taylor vision. AGL needs a board that understands it. Mike Cannon-Brookes has stated that if the demerger was scrapped, he'd look to seek up to 2 board seats. It'll be interesting to see how that makeup goes and what the board composition looks like, particularly with the significant transformation that will definitely go ahead with a number of people stepping down, and also supporting with both capital as well as talent. As we can see here, just for the contextual backdrop of ASX AGL, AGL has lost nearly 2/3 of its value over the past 5 years. Obviously, a little bit of a run-up to start 2022 with the significant attention on the energy market, as well as, of course, the attention from Mike Cannon-Brookes and Brookfield Ventures. They made 2 different bids at $7.50 and $8.25. So it'll be fascinating to see what's next from here. And so ultimately, where does the discussion land? There's still a number of different unanswered questions. We know that we're heading into an environment that's inflationary, there's rising electricity prices, and cost of living is top of Australians' agendas right now. It was top of the election, but energy reliability is also important. And this is going to have to be navigated with this transition towards the renewables. Of course, as we do this transition to the renewables, it is worth noting as well that Australia is the world's largest exporter of LNG and the second largest exporter of coal. We have large industries in the fossil fuel industries, and so working out how we can transition this towards a more green energy future, while of course still supporting the jobs, and of course ensuring that it doesn't have a significant impact to the underlying economy. We know that Australia voted for climate change. We saw it with the rise of the teals, the green slide throughout the election, and so Australians want change now. AGL is going to have a restructured board one way or another, so we'll continue to watch to see how that evolves. If you've enjoyed the video, drop in a comment, let us know your thoughts on everything that's played out with this AGL discussion. Welcome to the second channel. Make sure you've subscribed, turn your bell notifications on. We'll be dropping regular videos on all things market, so it's great to have you join us from the start. A big thank you for joining us. For now, stay well and happy investing.